Hey, this is Matt from InvestiQuant. Today is Thursday, April 15, 2021, and yesterday we saw another day where the market pushed higher. However, yesterday we saw the first sign of selling taking place in the market. So we're going to look at a pattern this morning based upon seeing some selling taking place at these all-time highs. And the way we're going to describe it is we're going to use the candlestick pattern that formed yesterday. We had a bearish outside day that also formed a 50-day high. So let's set that up and discover. We're going to use all four instruments, and the setup is going to be based upon entering the market long at 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time. Now, currently, the market is trading a little bit higher, so I'm going to go into the opening filters, and I'm going to say that the gap direction is up by clicking gap up and gap direction category there. Next, I'm going to go into the price pattern section, and I'm going to say that yesterday was a bearish outside day. So the easiest place to grab that's going to be from the active today section, which lists all of the filters that are applicable for today. And if I go down to the candlesticks, you can see bearish outside day, and then right underneath that, I can scroll down a little bit and see at the bottom option of the new high section, the highest high of the past 50 days. So I grabbed both of those patterns here. They come from the candlestick category here. So I can scroll down, you can see it, and the new highs category right there. And if I scroll down towards the bottom, you can see that one. Now, lastly, I'm going to go into the indicators and add that this is above a 10 and above a 200-day simple moving average, and then I can click View Results. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time, when you are gapping up when the prior day had a bearish outside day. And that bearish outside day just means that it had a higher daily high, a lower daily low, and closed below the opening print of the session. So it makes a red candlestick. And then it also had the highest high of the past 50 days. So that higher daily high was the highest high of the past 50 days. And this is taking place above a 10 and 200-day simple moving average. Historically, dating back to 2003, we've got 31 samples of this pattern taking place in the S&P. It's happened 44 times in the NASDAQ, 23 in the Dow, and 30 in the Russell. If we look at the win rates on them, you can see a couple of them are favored and a couple of them are neutral. So the S&P has been pretty favored on those 31 samples. 68% of those have closed above the open for the day. For the NASDAQ, it's neutral, 52%. The Dow is very similar to the S&P with a strong win rate there at 74%. And then the Russell, more like the NASDAQ, where it is very neutral on the win rate at 50%. The average win to average loss is favored on the average win side for the S&P and for the Dow. So both of the ones with the stronger win rates have larger average wins compared to their average losses. Whereas the two that are neutral, the NASDAQ and the Russell, on their win rates have larger average losses compared to their average wins. So we don't see all four instruments agreeing on this pattern, but we do see a couple of them that have been pretty strong historically on this day after a bearish outside day pattern that makes a 50-day high close. So hopefully you found that helpful. Good luck today, and we'll see you next time.